Good afternoon, everyone. This is Rose with Brooks Price Action team. I'm going to do an end of day quick review for October 22nd, Tuesday. I didn't stream in the trade room today. It was Al Brooks and Brad Wolf. I'm going to be streaming tomorrow afternoon. And come join. You can join by going to brookspriceaction.com/rose and subscribe there. It's $99 a month. It's full month coverage, Monday to Friday. Some days are full days starting at 9 a.m., ending at 4 p.m. Uh, so, so that you won't trade alone. We have pretty interesting day as we started the day with a massive gap down, but I was looking towards left is of, let me get rid of that, left of the chart, and earlier is I find quite a bit of support right there, and let me make that a little um, prominent. So here is support right there. I can also take from starting from there and then take that high just about, and then there is this gap right here is, and let's see, um, you can simply find here is highs, highs again, then comes down, and here's what we're respecting. Just about, maybe I'm missing something there. Not necessarily, yeah, just about. So this is what I would leave, and is I would look for this area test um, for is this morning. So now this is the is daily. These are the daily bars. And you can see yesterday we had literally maybe a 1 or 2 tick body, and it closed as a doji. So I said in the yesterday's end of day recording, I said possibly we could go and test this high is if we gap up is in the morning, and we would test there and we would try to come back down. Otherwise, if we start somewhere in the low, then we're going to go and back and test. And I said it's probably going to be some kind of an inside day, and it's going to go sideways. So instead of going up, we did go up, but we had to open up around here, and came down and tested this bar's low, the stays low, and then started to go up. So this is where we started today, this morning, and major gap down, but we are in a trading range, and we are testing the trading range lows. This is some kind of a breakout here. So I'm thinking major sell-off. So market is seeing 1, 2, 3 wedge top, comes back down and retests these lows, breaches a little bit. But notice what did not happen here. What didn't happen was taking out these lows with bare bodies. So we didn't have any of that. But the one thing that I'm missing on this chart that's very important is the low of yesterday, which is right there. Okay, so I'm going to color code that. And right here. Low of yesterday, I use generally green because I like to buy as market comes down there, but this green is just not all that visible. So let me pick something. Okay, so that's yesterday's low, and I need yesterday's high, which is bar 10 from yesterday. I'm gonna put it there, and I generally use a kind of red color because when price goes there, if we're in a trading range, most likely we're going to trap the buyers above it. So there is that. And then yesterday's close is super important. So that's bar 81. And that's generally, I use black. And I don't really look at yesterday's open. One can definitely put it on the chart, which was right here. we went and tested, but that really just doesn't matter. What's important is today's open. So today's open was right there, and I'm going to mark that as gold. Okay, so I have my levels, and I'm gonna lock them because I like to clean up the rest of the graphics. Okay, so we have yesterday's trading range is we are opened at the bottom, and we are testing is the support area, and we're not breaking the support area, therefore I'm looking for failure. Now I want you guys to pay attention to something here. Now, how did I expect market to keep going up and up and up? Well, look at the bar 1. We do have an inside bar 2. It closed bullish. Then we have another bar 3, which is pretty much an overlapping bar. And the market is clearly not wanting to sell and come down and test the is bar 1's low. If we were to close below bar 1 a bear body, I would have expected follow through selling, maybe a wedge bottom, and then is look for a reversal up after the first 30 minutes or first 90 minutes or hour. But that didn't happen. So we have 3 bear bars. It's kind of it is a triangle, and you can see right here. The first breakout of a triangle is 50-50 success. So most likely it's going to be a fake breakout. Bar 4 breaks above the triangle trend line high, and then comes right back down, and then tries to close another bull bar. But we now have 5 bars overlapping. So I want to buy, but this is a trading range, pretty much going sideways, but it's making higher lows. And we're definitely not, if this is your trading range, right? If you take this entire trading range from all the way to bar 6, and if you find your trading range midpoint, which is right here, look what's happening here. Markets keep coming down and keep coming down and keep coming down and testing, but not able to close a bear bar to come back and test the bar 1 low. So this is a good sign, is I'm looking to buy. So how can I buy? Possible bar 1, I'm sorry, but high 1 and a high 2 with bar 5, but I'm not feeling all that is content buying here above bars, because every time market goes and tests the prior bar's high, there's sellers there and they're selling. So clearly we are in a limit order market. So I'm looking for a good buy signal bar. We'll start at the enter. Is we have an inside bar 7. That's a leg 1. Pull back leg 2. Market is continue to go on high. So that's great. I'm going to extend this trading range, and we finally have a breakout. My only problem with this breakout with bar 8 is that it closed below its midpoint, and it's not really going all that high. There's not much of a room here. Anyone bought the high 2 above bar 5 is going to take profit at the moving average. So you now have a leg 1, leg 2, leg 3, and then we also have a wedge top here. And you can see that we try to get another breakout, and buyers are having a hard time getting above the moving average. So now we have a very strong bear bar closing. It actually activated the limit order sells above bar 9. So now we have this body bar 10 closed is somewhere very close to the open of bar 9. So I'm thinking I can sell this bar, and that's what I did. So I sell the close, I put my stop there, I'm going for a 1R. I got my 1R, but I can't see a bear bar closing below the 1R, so most likely I'm not going to get my 2R, and the 50% of this trading range, it is now holding. Okay, so you can also say, well, what if I just, since we came down, what if I just extend my trading range and see if I'm actually testing the 50% out. Problem here is that if you're going to only take the body, okay, then this is how you measure, right? So we dipped below the moving we are below the moving average. We dipped below the 50% of this trading range, but here's the leg 1, here's the leg 2, here's the leg 3. So you have a micro wedge here with 11 low and a 13 low and 16 low, and suddenly we have a very good close. You got a high 1 underneath the moving average, you are a high 2 underneath the moving average. But it's a really good bar, and since we have a micro is wedge bottom, okay, now that's one way to measure. The other one is extreme to extreme, and then find your location of the bull bar closes. Is it above the 50%? Yes, we do. So we have also is failure over failure is swing setup right here. Double tops, double bottoms, double tops. So we have several different double tops and double bottoms failing to break out. We finally get 2 consecutive bull bars. Both of them actually closed above the moving average. So if that's, I'm sorry, not moving average, the 50% of the trading range, that's good news. So I'm going to start to measure from here. But I want to show you guys something. Here, you also have an early failure of a failure, 2 sets of double tops and double bottoms with 2 consecutive bull bars here. Problem here is that they're overlapping, they're not all that great. But if you do buy with the stop underneath 5, as low as you can go there, and is your 1 hour, they reached the target, but it came down very fast. So it really didn't give you any time to really enter. If you had a buy order above 4, you were obligated to take profit at the 1 hour, and no bull bar closing above it. So now bears are going for is failure over failure, is swing, but the problem here is that bulls are still probably holding. So bears couldn't even get a half R. I would not take this because it's not a good setup. The only setup that I have here is that is limit sell from above bar 9 and a closing of a bear bar. I could definitely go for a 1 hour target, and that would be my only target right there. So good job bears, but that's all they're getting. So now I have more is bull targets. Really nice 2 bull bars, consecutive bull bars, and it's a higher low. I can definitely go for a 1 hour target, maybe even 2 hour. And you can see how market actually reached a half hour to profit there with 22 high and then came back down. So we don't have a breakout from these. Let me get rid of these. We don't have a breakout from the bar 8 high with a bull body until bar 25, which closed nicely, but no follow through. So market is getting a little bit of a hiccup there. You have a double top there. We're going sideways. You have a neckline here. Bears see a neckline. Bulls see a neckline. I mean, it's just a mess here, and it's going sideways. But one thing that's holding is I'm still going for this 1 hour target. This gap right here. So because we have a very nice gap, right, is from this close to those close. This is the gap. If I extend it further, we keep testing the 50% of this gap, okay, which is fine, and we're not closing this gap. That means bulls want to buy, and I'm seeing again failure over failure is a swing, 2 sets of double tops and double bottoms. I got one there, I got one here, I got one here, I got one here, and a triangle. We also have a double bottom bull flag, and I can see that bulls are trying to break above this trend line. So now I'm seeing 2 bull bars, 2 consecutive bull bars. I'm able to buy once again. I can now put my stop there. Stop doesn't need to go there. Stop should be under higher lows, but for target finding, I only measure the 2 consecutive bull bars, highs and lows. So here's my 1 hour and here's my 2 hour. I went long. I told everybody on Discord to hold it, and we're gonna go and get that target. I also had a target on the daily chart, which was 59.03, and I did mark 59.03, but I was really looking for a 1 tick above. So that was 59.03 and a quarter, and the market tested and trapped everybody. Still was going towards the high of yesterday. You can't really expect high of yesterday to test it when you have such a gap area here, bears are going to hold this area. So your job is to take profit because that is a 2R target. Whether you are measuring from 16 and 17 swing or you're measuring with this, maybe you missed it, but market is giving you another chance to get in and go for a 2R target. Anyway, so that's a good work by these bulls. So now is we have a strong 2-bar reversal with 55 and 56. Again, is I'm going to take that and I'm going to sell. Now is here is my 1-hour target, but then we get the bar 57, which is a breakout. So I'm looking for a leg 1 and leg 2. So I'm going to remeasure from there and that's I'm going for a 1-hour. Instead, we came down 57. We came down to half hour and we could not close below the half hour. So I'm wondering why can't we go further down? So it's better to be conservative and measure from the close of bar 56 because that's where I sold. And I went for a 1-hour that way and I had a 1.5 right there, but we just tagged it and bounced. So now we're closing strong bull bars. I'm not interested in holding this position. So I'm not looking for a 2R anymore. Plus we have a strong bull leg. So it's most likely the 50% of the bull leg, these buyers are waiting. We got a gap here. 49 is a breakout. I'm looking for a leg 1 and a leg 2, which I got. So the starting point of 49, possibly there are buyers waiting again. And in the meantime, I'm seeing a spike, pull back in a channel. So if we're going to pull back now with an inside bar at a support level, there are two types of support. It's this gap area, the moving average from 1-hour chart, the hourly chart, right? So we do have a channel right there, a bear channel, and we're probably going to break it. Where can we go? We're probably going to go back to the channel starting point. So I told everyone to hold their long into bar 58 low and bar 58 high. There I'm going to be looking for a double top neckline and a bear flag formation and sell again from above the moving average. So is in the meantime, I'm looking for levels for market to actually fail above the moving average and sell into. And those levels were found is pretty much here's an impulse, pullback, but then we had another impulse. So here's your first leg, complex leg, pullback, second leg, pullback. So I'm looking for one, and then I'm looking for, so this area I said is a very important area, we're most likely to come down and test this area at the close. But if we were to break below it, I had another alternative area which was right around here. Now tomorrow we might actually get there, but I'm not so sure. This area is now holding its double top neckline. One thing that the bears failed to do today, they failed to take out that neckline with a bear body. So that means this flag is probably going to fail, and we're going to try to go back inside the bar 78 and try to close this gap. Okay, if we cannot close this gap tomorrow, bar 78 gap, then market can sell from there. But you want to see this area broken, and then market to sell into is there's a tight trading range here. Here's what I'm interested. I want market to sell here, and this is what I'm looking for. So if we go up here and then we start to sell with a pullback and we come back down, and we would have maybe 1 2 3 1 2 3 nested wedges here, maybe like that, maybe like this, right? Nested wedges. So I'm going to be looking for two touch. Okay, maybe we go up and then we come back down. We need a lower high, double top lower high. So that's why I'm thinking we could pull back and this gap area will hold. And then we're going to come back down and we're going to have a wedge bottom. Then I'm looking for a reversal pattern and go back up again. So this area is a very strong area, whether you mark the 50% of it or the high. I'm looking for a second buy signal around here tomorrow. That's what I'm looking for. Because market is, like I said in yesterday's end of day review, I'm looking for market to come up here and test, and in the meantime maybe overshoot and get to the 6,000. So I'm really looking for 6,000 price points to be tested. But we'll see how this goes. If market doesn't want to go up, we do have a trading range here and a triangle. Now we could go up there but not break out, and a breakout from the down below. If it's strong, we can end up coming down to this trend line that I had for some time on my daily chart. And you can see right here is bears can bring us down here, but I'm not so sure. We need kind of two consecutive bars like this to get another leg. So I think we need to go up and trap the bulls and then make two consecutive bear days and then continue to sell into here. This is where I'm going to be looking for a bounce once again. So it's a similar thing on the 5-minute chart really, but it's just on a micro level. So it's very interesting open, is sideways, but it's trying to go up, except that bulls are not able to get a breakout. So since neither bar 8 and 9, bar 8 is a breakout bar, and it's kind of a second leg up with 9, but and that's all it did. And they try to get the third leg up with 10, but it failed. So you can't really keep buying this. So now I'm looking for several legs down. This pattern right here is exactly the same as this pattern, which is a spike pullback and bear channel. Spike pullback and bear channel. So we're going to go back and test the bar 11 high. If I don't see a double top and a neckline around the moving average, I'm not looking to swing this further down back to these lows again. Now, bears, granted, they tried to get their double top neckline with 19 low, but no bear bar closing below it. There's nothing to sell here. So we're going to go back up again. Now I have a spike, pull back in a channel up, but we're also not able to take out the 22 high. So those bears try to sell here to bring the price back down to the 15 or 16 lows. Try to sell once again and break even. So now we're going sideways and a reversal up. So bear flag failed here, and a several low 1, low 2, low 3 failed here. When a low 3 fails like that, I'm looking for a massive reversal to test of the bar 22 high, and I'm looking for a measured move up. So you can also measure your measured move from here, and that's your measured move. Or you can say, I'm going to take the bar 16 low. Since we've broken out from here with the 49, that is my measured move. And congratulations, you got your measured move to the tick with an extra couple of ticks to cover everybody's orders, okay, is without trapping anybody. So anyone who's smart knows how to manage to put a measured move on the chart. If you don't know, go take the course at brookstradingcourse.com. Get the full course, which is basic and forex course together, and learn about it. So it is a video course, very comprehensively developed, and it's a ground up. It's going to build your skills, knowledge, and it's going to make you a good trader. So you can learn all about the measured moves there. But tactically, if I go with this flag formation, but patterns fail. So just look at the bars. And here it is, a beautiful breakout bar 49. I'm looking for 2 legs up. Leg 1, pull back, leg 2. That's wonderful. So now we have a breakdown. Bar 56, I'm looking for a stop order market. Is 55 and 56 is overlapping, but the 56 did close a bear body below the 55 low. So that to me is some kind of a breakdown, and but still it's a 2-bar trading range. We're probably going to try to get back to the breakout point some point, and bar 58 tried that, but they could not close a bull bar. So that means these bulls are going to start exiting out, and we're gonna get 2 legs. Here's a leg 1, here's a leg 2, and that was beautiful execution by bears into the support and then the end of the day we go right back up again. And here is the breakout bar. It's an internal structure here. There's 68. That's the breakout bar. So I'm looking for a leg 1 and leg 2. Leg 1 ended up going like that, and then here's a leg 2, and here's a leg 3. So I have a wedge top right there. So if this starts to come down, because we're hitting some kind of a supply zone and or sell zone, when you see a bar like this big, okay, it's several bars on a smaller time frame. So that means somewhere at the lower third or the 50% of this bar, which I posted, I literally spelled it out. is on Discord is saying that the lower third of 55 and the midpoint of 55, there are limit order sellers waiting. So if you're counting 3 legs up and a wedged up, now is the time to take profits and look for bears to reverse the market down to the midpoint right here. So you want to look for 74 scalp, 71 scalp, and then hold it until the bar 66 lows or bar 66 close. That's where you need to collect and be done with it. So tomorrow, market can either resume and go higher, or we're going to go and make a lower high double top, and we're going to get a reversal back down. We could have a bear day, and market can come in here. So is another alternative is that we go up, we break, we come down, we try to break, but we fail, and then we come down. Then this is where we're going to sell. And as the moving average goes along, then we would just reverse back up. Possible resumption there if we're going to have a bear day. Anyway, all right, everybody. So hopefully you enjoyed this end of review and learned something. I will see you guys tomorrow afternoon in the Brooks Price Action Trade Room. Please join here by subscribing, brookspriceaction.com/rose. Bye, everyone.